Hi guys, welcome back to the podcast. Happy Saturday morning. I'm actually in Bangalore and we recorded this a few days ahead. So if the earth had broken down and shattered on Friday evening, that's why we're so calm. Because me and Dana had recorded it earlier before the all hell broke loose. So if you see us being absolutely chill about things, it's because of that. Keep that in mind as we talk more and more into this video. If it is related to market events, you won't find it here. The current news is not here. We are talking about history.
Correct, sir.
Living history. Yeah. So, what is it, Dana?
History, but the question was already asked. But again, the same questions has been asked by our viewers. So I am taking that question, sir. The first question was PG Invent. So the question was asked about the correction was happened in the PG Invent. Okay, right? Everything was okay. But is it a time for a multi-bagger or capital appreciation thing in the PG Invent again?
PG Invit will never be a multi-bagger. PG Invit will never be capital appreciation. Because for capital appreciation to be there, let's say you have a undi in the temple, right? I hope our viewers know what an undi is. Do your generation know what an undi is?
Yes, sir.
What is an undi?
The temple have some. It's in Tamil. We can say. It's
Tell in Tamil.
Kanikai.
Kanikai. Or it's a metal box that you find inside the temple. Easiest definition is that, where the hopefuls come asking for wishes and to be granted by the gods. Then they pay for these wishes by dropping coin into the box, telling God, here, I'm giving some of my money to you also. Take care of me. So that is Undili, right? So when the thing gets full, the temple guys, priest will cut it open, take the money out, then the temple committee will do whatever they do with it. God knows what they do. Because I've never seen anything come useful out of it. So even in Tirupati, they have a huge one, right? But every now and then they empty it. When it fills,
correct, sir.
Yeah,
they will empty.
Yeah. So this is what PG Invit is. Every year, they collect payments from everywhere. Then when their undi is full, they break it open and they distribute it.
As a dividend.
Yes, it's distributed. After it's distributed, what is inside?
Empty.
Correct. So how will capital appreciation happen? Capital appreciation has to happen when you keep on putting more and money in your wallet is getting fatter and fatter and fatter. Everybody sees your wallet is getting fatter, then the value of your wallet goes up. Your 50 rupee wallet on the roadside which you bought for while you were coming to office, because it has 5,000 rupees in it, is it still valued at 50 rupees?
No, sir.
How much is the value?
5,000.
5,050, man.
5,000.
Plus, of course, you're a superstar now. So maybe it's worth 10,000. Then has become superstar. So 5,050 is value of the wallet. That is capital appreciation. But if you keep on removing the money from your wallet, it is worthless.
Okay.
Right. So PG Invit is a stock like that. So the price which you're seeing fluctuating in a market, yeah, it will fluctuate, but it's very marginal. If you're looking at it, let's say you buy a PG Invit and you hold it for 10 years, you will hardly see the capital appreciation. It will only be inflation which is appreciating in it. What will be really appreciating would be something like an ITC or anything else. Any other company where capital is kept in the company for investing and growing the business, it will appreciate more. So, of course, today's 90 rupee, 80 rupee PG Invit, by the time I close my eyes, hopefully it will be many years from now. Dana will be hopefully regarding me at that point of time and remembering me and telling his children about me. So at that point of time, this 80 rupee PG Invit might be 200 rupees. Possible. Because inflation itself will take. Petrol price, coffee price, everything is going up. So PG Invit stock price will also go up. Yeah. But if you put the same money in some other stock, that will have gone from instead of 200 rupees, it will have gone maybe to 600, 900, 10,000 rupees. Who knows?
So that's the capital appreciation?
Yes. So the way you have to look at PG Invit is not for capital appreciation, for dividend. It's like bonds. Bonds, you only, end of the term, what you get your money, the money which you put in, you get back.
Correct, sir.
But other than that, you're getting interest. Same thing is true with PG. That is the way you have to look at it, right? But it's not. That's a strategy what Anand has talked about when it comes to PG Invit. Is this 100%? Nothing in market is 100%.
Okay, sir.
Because at least in bond, you are in an agreement that your capital has to be returned.
And interest also be paid.
Yes. PG Invit, tomorrow, they find out some malfeasance has happened, some goodwill has happened, as you guys say. The company collapses, you lose everything. You cannot go and say, hello, give back my money which I put for the stock. It's not like a bond. Remember that.
It's purely a stock.
Yes.
And if the price correction also happen, if the capital appreciation also in the 10 years or 20 years, we need to look at it, purely what you are talking about. It was
correct. And remember, it's a government-run company. We all know how good government runs companies.
Correct, sir. Okay. Then the second question. Thangamayil Jewelry. In February 23rd, Sunday, they are opened a new branch in the Chennai T Nagar, sir.
I went. Did you come?
No, sir.
Yeah.
I don't know.
I went.
Because you are a shareholder. You
to make sure
say-
everything is okay. It was very nice.
And then the Monday morning, the market was open.
Hmm.
20% Thangamayil Jewelry share was up. Because the reason was Thangamayil, that Sunday opened showroom, 16 crore they have been made in the one day sale. In the showroom one day opening sale. In the gold, silver and the platinum, diamond, all combined, 16 crore has been the one day sale. So the investors has been looked out in the way, oh, in the Chennai there is a many demand has been happened. Okay, the Thangamayil has lots of potential to grow up. Okay, then we can invest. The 20% the share price was up in the Monday morning and the upper circuit was touched. Okay, this all other good news. If you are coming into the investor, we don't have the Thangamayil Jewelry still now. If you are looking for the
If Thangamayil is not in your portfolio, it is not the time to buy it.
No, sir. The question is Thangamayil also in the list and Kalyan also in the list. Kalyan we have been left out. But if we are looking in the
Kalyan, the problem is not the valuation. I mean, valuation is also high. But the problem with Kalyan is it is the management, what they recently came in the news. So Anand has questions about that. As far as Thangamayil is concerned, it's a great company, great brand. What all you said is true, but it's very expensive. Right now, it is at 41.
41 P. Sir.
Yeah. So the only people we should talk about Thangamayil is people who are applying for the rights issue. So that is the only thing. If you own Thangamayil, then make sure you apply for the rights issue. It's worth it.
Oh, okay, sir.
Because they're giving it at a great discount. I think 1,400 or something.
1,400.
Yeah. So it's very cheap. You're making sweet from nothing. You're getting 300 rupees. For every 1,400 rupees, you're getting 300 rupees free.
And the third question, sir. We all are started the shipping in the mutual fund. In the 2025, we have started as a beginner and investing. And we are seeing the massive loss.
Yes, as long as you're investing in passive funds, don't worry. If you've got active funds please worry.
Please worry, okay.
Because I do not know what funds you put it in, man. See, everyone thinks, I have a hammer, right? You're asking me to hit a small nail inside a glass box. I can't. My hammer will break whatever I hit. So, you will have to talk to your financial advisor. You will have to take a call on your risk assessment. You will have to say, okay, what is the prospect for the shares mutual funds I've put in, active funds, sector. You have to analyze it. Just watching some YouTube video and some crackpot like me sitting and telling you, hey, sell it or yo, buy it, then you're crazy. Active mutual funds are going to suffer more pain because they are prone to it, not because they're bad investments or anything. In volatile markets, active mutual funds fluctuate even more
than the
passive funds and even probably the market. Because the strategies of active mutual funds are like that. They're looking at growth. So when you're looking at growth, you take high risks. Right? It's like being a batsman. Right? Now you have to do pinch hitting. You guys don't watch Test cricket. Do you know what Test cricket is?
No, sir. Only T20.
There's something known as Test cricket. There used to be something known as the night watchman. Right? The end of the day before the next day, if the wicket falls, the night watchman will be set in. And the guy has two jobs. One is to hold wicket. The other is see if he can hit some runs also. Right? Sometimes it's send the bowler as a pinch hitter also. Wickets are falling. You're going to all get out. So quickly see if you can use the balls and hit some fours and sixes. So that's how actual mutual funds are. They're like pinch hitters. So you have to understand that before you start investing in it.
Okay, because we are in the current generation. So we are looking for like 6 and 4s.
So that's why you'll say this, I want 6 and 4s. It's all very nice till you get out. First ball out, Doku happens, then what will happen? You'll be walking back to the pavilion like this with the bat, and a quack, 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 quack will come, and one egg will come rolling. Duck out. Everybody laughing at you, like, hey, didn't you say Anand said this or this man said that? Pinky Ponky said that. Don't you know that? Are you a fool?
Currently, our situation is right now.
Yeah, so that's why I'm saying, if you're in actual mutual funds, look at exiting, cut your losses, and invest wisely in sectors, which are stocks which you know about and understand. But before you do anything, please, for heaven's sake, talk to your financial advisor. Don't go based on me talking on a YouTube channel or Anand talking or anybody talking. Get yourself a financial planner, advisor, whatever you want to call them. Someone you trust, someone you know, who talks the kind of language that you understand. And, it's like a doctor. Not all doctors work for all patients.
The last question also appears, sir. In the active mutual funds, if we are holding, like, okay, penny of the active mutual funds we are holding, we don't know what mutual fund we are holding. It was an index or passive, we don't know. And it was the active mutual funds, or we don't know. So if you are taking that, which mutual fund we are holding, so if you are like It was a
happens.
flexi, small.
I
made.
understand it happens. All of us, we get FOMO and we get excited and we go and just look at something randomly. Someone tells us something, we buy. Now that you have bought it, now that it's corrected, now you're feeling pain, take the time to understand what you have done.
For the waiting period, we can continue the ship. Because we are not having that money, we don't have. Because 10 years of period, we don't have that money. So we continue the ship in the active mutual funds.
I will never say SIP in actual mutual funds.
If you are continuing the passive,
For
then
10
we can
years,
continue.
if you're looking for 10 years, do not do actual mutual funds. If you're looking for 2 years, 3 years, it's a risk.
Okay.
I do not know. Maybe some funds will make money. I don't know. In the short term, everybody makes money, depending on who you are and what you put your money in.
Okay, sir. The conclusion I understand. If you've done the passive funds, then nothing going to be worried. We can continue the ship. If we are done in the active mutual funds, then we need to consider the fund advisor or a financial advisor. We need to consider.
Correct.
And then we need to.
Because in passive, the name itself tells you. It is
index ETF or bank ETF or Sensex ETF. It will be clearly understand. But in the active mutual funds, the same problem. That's all, sir.
Yes, that's all.
That's all, sir.
Okay.
Tomorrow
Thanks for watching the video, guys. Thanks for watching this podcast. I'm sitting in Bangalore. Dana sitting in Chennai. So if you catch Dana somewhere on the streets because he's missing me, give him a hug from me and say, don't worry, Vinod will come back because he will be rather sad that I'm not around. Thanks for watching the podcast. Have a wonderful day. Have a wonderful evening in your revelries or whatever you're planning to do today. Be safe out there. Like I always say, see you tomorrow morning on a Sunday morning, bright and early. Maybe with some more advice on things which you asked or maybe things which Dana wants to know. And we'll talk further about that before we get back into the week and see what we can do. Thanks for watching the podcast. See you again tomorrow. Bye.
Bye.